Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. We're going to be talking today about mistakes that retirees are making right now that are costing them thousands of dollars and how you can avoid it. So if you're looking to purchase an annuity and you're looking for the right one, you don't want to waste money, and you don't want to look back and say, oh, wow, that cost me $10,000. That was a $10,000 or $100,000 mistake. Then go to my website, johnstevenson.com, and check out the annuity calculator so that you can see what the payouts are right now. Okay, and it'll show you immediate payouts. It'll show you payouts if you defer it out 1, 2, 10 years, 20 years, whatever. So it can be a very useful tool when you are researching the best annuity payouts for your retirement. So, and of course, if you're looking to purchase one, I'd love to help you. There is a book a call link on my website, and there's also one right below this video. So happy to help. I'm not going to try to push or sell you something, but if you are looking to purchase an annuity with me and you're looking for someone who is transparent, then I'd love to help. So I'd love to share everything that is available regardless of what my commissions are. Sometimes my commissions are low, sometimes they're high, but it is really about you, and it's about the best payout for you. So, and of course, I will be there to help you every step of the way. So, but I'm going to share with you some mistakes people have made in the past, and of course, some of the things that I'm doing to help them not make those mistakes. And I want to share that in this video as well. Okay. So I would say probably one of the biggest mistakes that I see when I meet with people is they're too rash or maybe uninformed. They will buy an annuity that their advisor pushes them to buy. I just talked with someone yesterday and he was like, yeah, he told me to buy it and I bought it. And then afterwards I was like, why did I buy this? And he just did it because I've known this advisor for a while. I trusted him and he just told me to do this. And then we started looking at it. It's like, yeah, he made a huge commission on it, but it didn't really help me. And now I need help. I need income. I need highest lifetime income. And what he put me in was something that had very little growth, had a bonus, and so it looked good, but it wasn't the best thing. Okay, so that's one example. Okay, and I hear this a lot from people as they are usually put into the wrong annuity contracts, and sometimes they can get out, but a lot of times they can't. They got to wait. I mean, usually you got to wait at least 2 years to get out of a contract, and if you do get out of it, you have to find a replacement that has a bonus. Otherwise, the insurance company won't take it. So that can be tricky. So it's important for you to be well informed. And if you're looking around for annuities for lifetime income for your retirement, then you should be researching all of the ones that are available before you pull the trigger. That is why I share my calculators on my website so that people can do their research. And then if they feel comfortable, they're absolutely welcome to reach out to me. All right. So let me just share my screen here. I've got a couple. They're both 62 in Montana, and they've got $600,000 they're putting into an annuity. Okay, this is just an example. You might have a lot more you want to put in, or maybe less. So if you look at this particular scenario, they are looking for the best annuity. Okay, maybe their advisor is saying, well, you should buy this one. This is a great accelerator product. It has a great index. The participation rate is 200%, and it is projected to grow to this amount. And if it does grow to this amount, your income is going to be this. And people are like, yeah, that looks great. Sign me up. And then they look at the fine print and they're like, oh, this is not guaranteed. All of this is hypothetical. Oh, this is tied to an index. It's not the S&P. Oh, it's got a history of like 2 years. So this is mostly back-tested results, right? They start looking at that and like, man, what did I sign? Okay. So when I look at lifetime income annuities, I like contractual. I like contractual amounts. Okay. I could care less about what the index does. Okay. I want a contract that says, here's what the income is. That's the end. Okay, that's what the income is. It will not go down. Okay, it is guaranteed, and there is no surprises. Okay, all right. So that's what we're looking at here. So I want you to look at this because this could cost you thousands of dollars. Okay, just this one mistake by choosing the wrong annuity. So if you look at this and say, all right, well, the highest paying annuity is Nassau, Equitrust, Nationwide. If I want highest rated, I'll probably do Nationwide. If I want enhanced payment, which is like LTC, income doublers, then maybe I'll do Corebridge. Okay. You see the income is virtually the same on both of these. So maybe I want the Corebridge one. So I'll look at that and say, okay, what is the highest payout? I'll look at this, say, okay, it was $62,000 a year. If I need LTC benefits, it doubles, but only for a limited time because what they're doing is they're liquidating my account. Okay, they're taking it when I need the money the most. They're giving it to me, and then if I die in the LTC center, okay, morbid as it sounds, but if you die while in long-term care, then that income stops and it reduces to the 62,415, which is already what the base guarantee is. So it is made to be there if you need it. Most people don't. Most people don't use this. Most people, I mean, this probably runs out in your late 70s, right? So if you want a long-term care policy, you should buy a separate one. But for this, it's nice to have it in the beginning. So maybe that's something you want to do, and you'll buy this policy. Now, you could have an advisor that's showing you something from F&G. It's paying you 61. Maybe he doesn't have access, or he's not willing to show you this. Okay, maybe he's showing you one from Midland. Midland's great, by the way, but the income's 57 grand versus 62. Okay, big difference. Maybe you have an advisor that's showing you Allianz. They're saying Allianz is great. They're the biggest company in the world. They're A+. You should buy them. Okay, and you say, okay, I will. I trust you. You're my advisor. And unfortunately, a lot of advisors will do this, especially since a lot of their broker dealers will push them to sell a lot of their products. So, and this is an example for many companies, but Allianz pays high commissions, and so it can be nice to sell them for sure. But I don't sell a lot of them. I'd love to more, but you can see why. I mean, there's just better payouts for my clients. So anyways, that's totally up to you. You decide what's best for you. But this is one mistake you can avoid simply by researching. And now I'm sharing where you can research. Go to my website, johnstevenson.com, and do your research. Okay. All right. Another mistake, okay, another thing that can cause problems and cause you to lose a lot of money is surrendering your annuity contract too soon. Okay. You can incur a lot of charges because you got surrender charges that can be upwards of 10%. And then if you got an MVA charge, which a lot of them have, that's a market value adjustment charge that's based off of the interest rate environment. So if you purchase an annuity when interest rates were, super low, and then interest rates rise, okay, then the value of your underlying investment obviously will go down. Okay. So if interest rates rise, then the adjustment will be low. If the interest rates go down, then you're going to have a positive adjustment on there. So anyways, the easiest way to say it is just, I'll just give you an example. Let me just bring up Nationwide. I'll just show you what this looks like. All right, let's say you bought this annuity contract, put 600 grand in, and you decided to surrender it right afterwards, just because. Okay, well, you're going to lose 30 grand. Right there. Say cash surrender value, $570,000. Not great. But that's just how it goes. So don't recommend it. But that is what could happen. Now, this is with growth. What's the worst case? Could it be worse? Yes, it can. So you go down here and say, what if they surrender it and there's no growth? Nothing. Cash surrender value, $537,000. Yeesh. Okay, that's a mistake. Yeah, that's a mistake because they bought something. They weren't supposed to buy it. They realized their mistake. They got out of it and they lost money. Okay, and unfortunately this does happen. And this is a mistake you can avoid. Again, it just goes back to researching. Okay, and this really kind of what I wanted to push in this video more than anything is to research. Research a lot. And I know this goes without saying. I know you're researching. You're checking out. That's why you're watching this video. But you need to know where to go because you can look up annuity calculators and they'll have calculators all over the web, and they're different types of calculators. But if you just want to have your questions answered in a very specific way, then go to specific calculators. And so I've got calculators. I've got a QLAC calculator, for instance. That's a calculator for a deferred income annuity for deferring RMDs. That is it. That's the only reason that is used. Okay. And then I've got a calculator for a SPIA and a DIA. And those are just the classic annuity contracts. You put money in the insurance company. They give you a payment that's guaranteed for the rest of your life. And that's it. They're full annuitization. There's no cash balance. You cannot get your money back. Okay. And then you got the income rider. Income riders are what I share the most because they usually pay out the most income. Some people usually want that. So the income riders are attached to a fixed indexed annuity. And if you go to my website, you'll be able to play with those calculators and see what those are paying. So anyways, it's not a hard sale, but of course, if you're looking to purchase an annuity, I'd love to help. Okay. I do like to show everything that's available. And if you feel comfortable, then reach out to me. Okay. There's a link below this video. It goes directly to my calendar, or there is a link on my website, johnstevenson.com, and you're certainly welcome to book a call with me there. So anyways, I hope this has helped. I try to keep these videos short, but they sometimes go long because I'm just trying to stuff as much information as I can. So I'm trying to give you as much info as possible, because I find people have a lot more value when they can kind of see how these work and how they can work for them. And then of course, I always give an invitation to check out and learn for yourself and plug in your own scenario. So anyways, happy to help if that's what it comes down to. But if not, I hope you like the video. If you do, like, subscribe, share, comment below if you got questions, and we'll see you next time.